CoreWeave just beat earnings and the stock dropped over 11%. It's in double digits. The market's still open right now, but 11, 12, 13%. And what we're gonna do in this video is we're gonna break down the earnings, what's concerning Wall Street and the market, and we're gonna show you the trade that I put on today on the option trading platform. So we're gonna break it all down, and be sure and hit like and subscribe, and let's get started. All right guys, here's the chart for CoreWeave. It hasn't been public that long, so we don't have too much to go on, but you can see it's at the bottom line of the trend line, trending up. Data center AI build out's huge, so I like it right here. If we look at the earnings, they just reported they beat by 22 cents on the top line on the earnings, and let's look at the transcript. This is just market beat. And if you look over here on the right, the key takeaways: 1.4 billion in revenue, 134% year over year, 55 billion in backlog. Excellent. They're continuing to expand capacity. The negative sentiment was a third-party data center power shell delay will weigh on Q4 results and push a material portion of CapEx into Q1, prompting 2025 CapEx guidance of 12 to 14 billion dollars, and in note that 2026 CapEx is expected to be well in excess of double 2025. But hey, that's what you got to do when you're growing. Negative sentiment, financing and profitability risk remain. Sure, you know, as you're building out, they've got to list that, but I'm not too worried. They've got huge financial backing, solid balance sheet, and contracts with NVIDIA and many all the big players in data center build out. Positive sentiment. They launched AI object storage, completed strategic M&A activity, and claimed technical leadership with GB300 ML performance results. Let's take a look at the slide deck from the earnings, and you can see here's the numbers: 1.4 billion in revenue, the backlog, CapEx, EBITDA, all excellent. We move on. Look at the revenue growth every quarter, up. Adjusted operating income also up every quarter. Net losses coming down, EBITDA going up. Excellent. Revenue backlog, huge growth. So awesome earnings. The only thing was the delay with the one partner. So if we look on Yahoo Finance, they've got a 1-year target where they have stocks at 89. They've got a 139 over here on the right. And if you look, I need to put that smaller, at their analysis page, come on, miss, and a beat, but you can see the annual increases that we just showed. We'll wait for that to pop up, but the growth, 80% growth next year, that's the big one. So they're actually killing it. So let's jump into the trade that I've got on. All right guys, this is absolutely ugly on CoreWeave today. I've lost $367, you can see right here. So hey, you can get in right now at a much better price than I did. But what I would do if I was trading, I'd go out. You can go out 400 day, anything over 300 over a year. I like on my leaps. So you could even look at the 402 day. Let's go right at the money. Go 85, just in the money. 3,900 mid price, 3,550. If we went out in the next month, 35.20, it's less. So yeah, that's why I went out 430 days. But CoreWeave for me is a long-term play, so that's what I would do. I'd go out 430 days just like I did. Right now, you could go 85. I went to 95, but we've had a drop. We're down 15% right now. So you could even go 90. Go 90, 33.15. And here's how we place a poor man's covered call. Close this up, and then we can sell 38 days to expiration. We open up the December, and we can go out here. I had the 120. You could sell like the 100. Actually, the 105 is the 33 delta. So as long as it stays under 105 within the next 38 days, you keep this $4.50. Actually, it's going to go in as soon as we press that. Well, let's go off. $33.45 is our cost. Now, just like owning the stock, as the stock price increases, we make money. You can see right here. So just like owning the stock, one option contract controls 100 shares of stock. So if it gets back up to those levels over $100, $144, we make $1,390, and it just keeps going up. So let's go back to the table mode. Go to the mid price, 33.15, and we've opened up the December chain. I would right now sell something. We've got calls on the left, puts on the right. So this is to buy a call. We want to sell a call out of the money. So we could have a 10% upside to 100 and collect $5.80. Now watch, when I click on this, our cost will go down by $5.80, which is really $580, because one option contract controls 100 shares of stock. Boom, now we're at 27.30. That's a great trade, great place to get in right now. 27.30 on CoreWeave. You can hit review and send and place the trade, and it's down 15%, man. I guess I'm going to double up and do another one. Here we go. All right, it's called DCA, dollar cost average. So I was down $389. Now I'm getting in at 15% down. I think this is an overreaction, and I believe in it long term. So actually, the CEO was on CNBC this morning, and he seems like a pretty knowledgeable guy. So, all right, there's the trade. All right, guys, for me, with the earnings that they just released, the small hiccup, and the huge AI data center build out that's just beginning right now, it's a no-brainer for me. I'm long CoreWeave. I'm utilizing the poor man's covered call. Let me know in the comments below, what are your thoughts on CoreWeave going forward? Remember to hit like and subscribe. Join the free Discord down below. There's a link. You just put your email address in, and you can see all my upcoming trades. As I make the trades, I post them on the Discord. So check that out. There's also a free options workshop and a full options trading mastery course as well in the links below. Check the description, and if you like this video, watch this next one.